This is episode 3 to the Tap and Barrel Bootcamp, and today we're going to be talking about the entry. We're going to be focusing on just the entry, okay? Boom, okay? Now, the entry is going to be for us, and the model that I'm teaching you today is going to be mainly on the 5 minute. Now, a lot of you guys who are not just from my YouTube and obviously are into my Discord and all the other socials and stuff, you'll know that we don't just have a 5 minute entry model, but we also have a 15 minute entry model, okay? And they both have their own purposes and their own win rates and their own conditions, but right now we're just going to be talking about the 5 minute, just so we don't need to complicate stuff, you know what I mean? I've just started this YouTube channel in terms of just being all in on the technical side of trading to fully teach you guys, for free obviously. So we have enough time eventually in the future to go over the 15 and the other models and stuff. Anyway. So, I just wanted to intro with that, and I also wanted to intro with what we've been learning so far has been the hybrid model, okay? And the hybrid model is a balance between mechanical and discretionary, taking the best bits from both. So, on the hybrid model, we do for the entry, okay? So we haven't gone over this yet, but we will today. For the entry, it's just going to be pure mechanical, okay? So there is no judgment involved at all. However, for the bias, as you know, due to the significant highs and significant lows factor, the bias does have a discretion, I'll just put disc for now, does have a discretionary aspect, but it does have, and can I change the colour of this bad boy? Put this as red maybe. But it does have mechanical guardrails, is what I call it, okay? And those mechanical guardrails on the bias is obviously the minimum. You know, when I talked about the minimum, and I'm just going to put this in like short, minimum 3 significant highs getting raised, and then the minimum 3, write this again, significant lows getting raised, and then that's obviously an uptrend, as you would see, 1, 2, 3, 1, 2, 3, that's obviously an uptrend, textbook shit. And then on the downside, the exact opposite. However, it is up to your human perception about, you know what I mean, whether you count, let's draw this out, whether you count this as a significant high or you're just highlighting this. And that's up to your interpretation. And the reason why I believe the discretionary bias is so powerful is everyone has their own edge in terms of their slight difference in perception of the market. And I always talk about slating the guys that, oh, you don't want to have you don't want to be trading off of your artistic view of the market. This is separate to that because we've got the mechanical guardrails. Okay, these mechanical guardrails are telling us that at minimum we need 3 significant highs and 3 significant lows. And using our brain, we just need to make sure that our definitions are staying consistent throughout our whole trading journey. As you know, we think in terms of probabilities, so any sort of, let's say this is us being consistent with our definitions, any sort of deviation on the plan could occur you know what I mean, 1 loss, 2 loss, 3 loss, which you wouldn't have usually got if you came on the straight and narrow, which means that you might be 1 loss, 2 loss, 3 loss down onto your, in terms of your funded, which might make you break some sort of rule where you wouldn't have usually broken it because you would have only been here, let's say, and then the fucking drawdown limit's here, if you would have followed the model. And then maybe, with you changing your consistency in terms of your definitions, you could also miss a win, which would be massive if you miss a win, because that's fucked, you know what I'm saying? Anyway, let's get into the actual nitty gritty, mate. But first, let's fire up with a coffee. Before we get into this video, boys, let me know if you watching this is from the Discord, because I'd love to know. I love the Discord, boys. And before we get into this episode of the boot camp, I just do want to shout out a couple of members who have been killing it. And when I highlight been killing it, I don't give a shit about results, because as you know, I'm trading probabilities. I know month to month there's going to be a set results for that month if I'm trading the same assets and the same model, so therefore I don't have any influence on that. So I'm never bothered about how people are performing, especially if they're trading the T&B model. I'm bothered about whether they're trading the T&B model consistently and whether I see them day in day out executing the same. Sorry, I just died for like half a minute there. But before we go into the entry, like I said, I just want to shout out a couple of the guys in the T&B chats here who are just putting in the work to learn the model. Obviously, I'm going to shout out Josh. He's a mentee. He's been absolutely killing it. But someone who I want to shout out, who I haven't given much praise in the Discord, is Mr. T. This guy turns up to fucking 85% of the live calls. He's just killed it on this USD CAD trade here, pieced it up. You know what I mean, boys? Like, this guy turns up every day. He watches all the YouTube videos. He's always asking me questions. Really wants to take his trading to the next level, and I think it is so far. So, big shout out to Mr. T, to be honest. And Bucko. Bucko's learning the full mech model. Well, he's pretty much already knows all the full mech model, but he just asks little questions here and there. But that guy is also killing it as well. His trading has taken a turn. He's now back up on his funded, and he was down before he started. So good stuff from him. Now, I'm going to be breaking down the step-by-step on here, and then we're going to go onto the chart, and we're going to execute that step-by-step. So, number one is obviously previous. I'm just going to abbreviate all this so you can hear me speaking, so you can write notes on that. Previous session level sweep. Okay? Now, this is imperative that this is in line with bias, okay? So, we'll put bias here, in line. That is a bad bracket. In line with bias, okay? Because if we're doing bias, and we're sussing out bias like in the previous episode, and we're going through the daily, the 4 hour, the 1 hour, and we don't even do a previous session level in line with that, then we've just wasted our time, mate. So, previous session level sweep in line with bias, and I'm going to write that again, because that is too close to other shit. Boom. I'm just going to put previous session level. Okay. So number one, previous session level. Number two. Okay. Now this is one that we're going to spend a lot of time on today because a lot of people misunderstand it. But now that we have the fib tool setting on it, it's really good. But the fake out. Okay. Okay. Then we got the fake out line there. Then we've got the BOS. Then fib, then line here, TP/SL, and then on episode 4 we're going to be going over risk and shit like that. Okay, so this is the step-by-step model for the entry. Little voice crack. This is the step-by-step model for the entry. What we're going to do is we're going to go back and we're going to go on, let's say this oil trade that I took yesterday, fucking heater of a trade, and I'll get down into that in a minute. But let me move my camera and put it on replay tool just so we can emulate these markets and do a live entry, so to speak. Sorry, my laptop just loves to overheat in this 30-degree weather, and then I put it in the fridge and restart it, and it's good to go, mate. So anyway, where were we? Breaking down the oil trade that we took so we can show you guys, obviously, so I can show you guys the entry model, because we've done the bias, we've done a little bit of foundations and niche ruling at the first episode and just setting the expectations for the model. But now we're going to be getting into the important part, okay? So the mechanical entry, right? Now, when we're looking for the mechanical entry, let me make myself a bit smaller here. We're obviously going to be deciding bias, like I said. So bias on oil was bearish, and we decided that using the episode 2 knowledge. Now, since we're bearish, we're looking for London highs to get taken, okay? Now, when London highs get taken, we need to then watch for the fake out confluence, okay? Now, the fake out confluence is, I'm going to explain it right now, and it's not too complicated, but some people get mixed up. What you want to do is, after the sweep, okay, in the case of a short, you want to wait for the first bearish candle to form after the sweep, okay? Now, once that bearish candle forms, you need to get your fib tool, and I'll go through the settings in just a moment, and put it on the combined range of the previous session and the current session, sorry, this session. The previous session and current session. So that range would be as so, or as follows rather. When I put it for the bottom first, just making sure the fib tool is right there, boom. And right here, outlined with this blue line, we have got our fake out zone, okay? So I'm gonna click on the fib tool now and then just copy down this setting here, okay? Now we wanna put our box there, and in the real market we would set an alert. So when price comes up and taps the zone, we would get pinged, and then we would know that the fake out confluence has happened. All that we need to happen is for price to come back in the zone and tap it. Because on the lower time frame, it looks a lot more clear, but on the lower time frame, we're aiming for basically a sweep, fake move down, price to come up and stop those nerds out, so the nerds get stopped because they got in too early. Then we get the breaker structure, boom, retrace, boom, TP, tap and fucking barrel, you know how it goes, mate. So, 5 minutes. Let's go back onto it. Let's wait for that box to get tapped. As you can see, tapped straight away. And when it taps straight away, you can just delete this fib zone now. You know it's been faked out. You would move it into the faked zone on the right. So we were open level, we had the sweep, then we were faked. Then we're waiting for a BOS to the downside using the nearest fractal on the 5-minute time frame as the break of structure confluence and break of structure level. Okay, so as you can see, BOS, boom, fib range. Okay, now the fib tool, now lock in for this one. Top to bottom. Okay, look, we've had this move. I haven't put the fib tool over here. I haven't done anything like that. We broke structure, then I've gone top to bottom. Okay, after we've broken structure, as you boys know, what do? We set our limit order in the Goldilocks zone. SL 1% above the high, TP 3 risk to reward. Boom, 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 savages. We got tapped, and then price did actually reverse. So in this case, this is one of those moments where my tight SL wins over the big SL. Now there's going to be cases with both, but essentially some people with this model like to give a bit of breathing room, and I do advise that's okay. That's fine if you want to do that. Don't stretch the model too much, but you can either do this or the tight SL. There's benefits and drawdowns to both. Obviously in this case you would have been stopped out, but maybe there's going to be a case, and there is obviously probability and stuff, where we get tapped and you use a lot of that SL, then it goes to TP and I would have already been stopped out. That happened on an oil trade here, and I'll just load up the Discord in the background of while I'm speaking about this, and you'll see what I mean. And the swings and roundabouts. What you boys have got to know about trading, right, is that when you change one variable, you're just tapping into another win rate, and it has equal probability, but you need to just make sure that you stay in on the straight and narrow with your variables, because the second that you tap into something else, you might tap into a losing period, yeah, when you were winning before. Like, I can't explain it very well in terms of this. We'd have to fucking speak normally, but and a back and forth in order for me to explain. That's where the fucking Discord's handy. But you just need to make sure you're doing the same thing every time, so you're stacking those variability, and so you're making sure that you're tapping into the same variables and the same probability. As you know, like I just said, shit can go down. Let's have a look at this. Where was it here? Ah, yes. Got entered in oil, looking really nice. Tapped and fucking barreled, mate. Anyway, that's fine. That's the game. Some people got that win, and then there's cases where some people got this loss and I got the win. So it swings and roundabouts, mate. It makes no difference as long as you just keep it the same. So in terms of risk, obviously we'll be doing that in episode 4. But as the mechanical entry goes, that is it. It's really simple, mate. We've got previous session level. We've got fake out. So let me just circle this. We've got previous session level. We've got fake out. Okay. Then what have we got? We've got break of structure, retrace, boom. Boys, this is why I'm known for simple day trading, because simple works. You don't need to overcomplicate it. We've literally just got like a 4-step entry. We've got boom, previous session level sweep, yeah. Then we've got what? Fake out. This looks awful, but if you're listening on an audiobook, you'll know. But if you're just watching on this without audio, you'd struggle, mate. Anyway, then we've got the BOS. Then we've got fib tool. Boom. And then we've got fucking barrel, alright? Then we've got T and B, mate. Boom. Barrel, 3R. Boom. Savage. That's what you'll be when you do the T and B model, mate. You'll be a savage. Anyway, I'm not going to waffle on too much about that, okay? That is the entry. If you want to know how to do this in a bullish sense, it's the exact opposite. And I'll literally just invert the chart because it's easy, mate. Look, let's say this instead of this London high, it would be London low gets swept. We have the same fake out confluence. We break structure to the upside, in this case, fib tool, retrace, tap and barrel. It's as simple as that, boys. If you boys have any questions on episode 3, the entry, put them in the comments. And at the end of this series, episode 5, it's going to be a Q&A answering all of the niche unanswered questions. So pop comments in the description below. As you boys know, if you want to trade with me live in the Discord, hit the first link in the description. There's also a little video in there and teaching you a little bit more about the model as well. So yeah, boys, I will see you boys in the next one. As per usual, you know where all of my socials are, mate. Get yourself involved. Peace out.